Good morning. All right. So we are on a couple of year rally in the stock market where we've had rising stock prices. We're in the middle of earnings season, kind of in the early innings, so to speak. We've had about a week and a half of earnings, and we have a lot to go. This week, there's a lot of earnings coming out. Today, we don't have any big names, but we've got some interesting companies that are going to announce. We'll take a look at the companies that are announcing before the market opens this morning. There's some interesting ones. Software, as an example, SAP is going to be announcing. So it'd be interesting to see how businesses are spending on software to modernize their companies. We'll take a look at SAP among other stocks. We'll also take a look at where interest rates are going. Oil prices are rising this morning. I think that's interesting to take a look at. And last time I looked in the pre-market, it looked like stock prices were going to open up lower. We'll take a look at the market and see where stock prices are headed. In general, again, we are on a good market, a good rally, and I hope it keeps going. Let's take a look at our community. Our community is made up of investors like yourself, and I invite you to become a paid member so you could enjoy some of the perks. We had a really nice weekend where we had two events. One of them was a workshop where we really dug into a few topics. If you'd like to see an example of that, there's a recording on the channel that you can take a look at and see what we did this weekend. Yesterday, we had an investor call, and it was really good. We went into a couple of topics, but principally we looked at Instacart, also known, actually their name is a little unique. It's Maple Bear. And it really looked like a solid company. We spent about a half hour really taking that company from pretty much a name that an investor thought was interesting and a good company to look at. And we dug into it for 30 minutes, every step of the analysis from qualitative, quantitative. It was a really, really good session, in my opinion. And that's the kind of stuff you can be involved with if you're a community member. So I encourage you to take a look at the details of the live stream and get signed up. So this week is going to be a limited week for me. I'm going to live stream today, Monday morning. I'm probably going to live stream tomorrow evening. And then there's going to be a little radio silence. I'm going to be fairly busy this week. And I'll be back on Friday. So it's this morning, Friday morning. That's it for the morning sessions. For the evening sessions, it's going to be tomorrow night and probably Friday night. I know that I usually don't stream on Fridays, but since I'm going to have radio silence for a couple of days, I thought I might come back on Friday and do an evening stream because I know some investors cannot make it in the morning. So look for me to stream on Friday and we'll go from there. All right. So let me turn off the music. And one more thing just to share, join us on Discord. Discord has been a really good place to communicate with one another. And there's a lot of good ideas being shared there. The type of investor you are, you could probably see there's other investors like yourself, and you can share ideas, maybe share analysis. Maybe you've been an investor in a stock for a long time and you can share your experience with that stock and your analysis, your details and knowledge of that particular stock. So join the Discord. It's been really productive. Just be aware that there's a lot of scammers on Discord. It's probably a very productive app, but the place where I've seen the most scammers, holy smokes. And then you can follow me on Facebook or Threads if you'd like. And of course, you could see me on YouTube as well as Twitch. All right. So let's take a look at where the markets are trading. And we are opening up a little lower, not too much, but looks like the NASDAQ is down 0.15. S&P is close behind it. And the Dow is down 0.097. The VIX is a little higher. And I know oil prices were a little higher. Asia, the Shanghai index, which is something I've been tracking because I think the China trade is something that I would like to invest in. And it looks like that stock market closed up just a little bit. China decided to lower their interest rates by 0.25 percent, so or 25 basis points. So I think that is going to stimulate some activity in that market. Excuse me while I enjoy my morning coffee. Hopefully, you're having a good morning. And so the market is starting off a little slow this morning. Looks like it's pretty much flat. Nothing big to report. As we look at interest rates, they're up a little bit today. The 10-year is up about 0.05, so 5 basis points, almost six. And I've been buying into bonds. We may be in a much lower rate environment like we found ourselves, 4 years ago, where it was super low and bonds were completely uninvestable because they paid so little. Why would I tie up my money in bonds? Right now, I think bonds offer a fair yield on a very low risk asset class. And I have plenty of risk in my stocks, plenty of risk in my crypto. It's nice to have some low risk bonds that are just sit there, do their job, make me a yield with a very low risk, very low volatility. And they really show up when you have a down market. So I might buy some bonds today since they are looking to provide a better yield. I'm buying into a long-term bond ETF. I might buy some more bonds today. All right, so that is the bond market. As we look at the different sectors, and it's a little early, but let's take a look here. Looks like communication services is doing well this morning. Materials, real estate's doing well. Consumer discretionary, doing quite well. The laggard is energy. That's funny because oil prices are up. That's a little strange. I would think maybe this hasn't updated from Friday. I'll give it a little time to maybe update. And I'm going to give all these indexes a little time to update. Let's take a look at the earnings. So the earnings this morning, we'll take a look at SAP and see where it's trading. I know a fair bit about SAP. I've known the company for, 25, 30 years. Yeah, for about 25 years. So I could really speak about the SAP business and share with you what I think of that company. And then we'll go down the line. I think Nucor would be interesting. Alexandria would be interesting. Logitech, MedSpace or MedPace, maybe Simpson Manufacturing. But let's get started with SAP. SAP is down a bit. And let's take a look at, well, I thought they were going to announce today, and I'm not seeing any announcements, but it says October 21st. That is today. And I thought it was going to be before the market. I guess we'll have to go to their investor page and see if we could find the earnings release. So it looks like there was potentially a misprint. Yeah, they're going to announce after the market closes. And was it me? Just a matter of being too sleepy this morning after the close. Yeah, I'm too sleepy this morning. I apologize. But the joint stock company, KESPI, before the market opens, I guess we'll have to go down a bit. Atlantic Union Bank shares. There's not a lot of stuff that I'm familiar with that has announced. So I'll just share with you that SAP is an enterprise software company. They sell to big, giant companies. And these companies run their accounting, their distribution, their manufacturing systems. A lot of their big systems run on SAP, their human resources systems. This tends to be a very stable stock, so to speak, because companies don't switch out their software very often. It's maybe like every 10 or 20 years, if that. Sometimes they keep it longer. And SAP enjoys consistent, revenues. You have you have a company that's grown over time. You can see their top line growth has been really good. And recently, they've been growing quite nicely. That's really nice. You have 9.5% growth in 22, 5.9 in 23, and the trailing 12 months at 6.5. That's really, really good growth for a fairly good sized company. 31 billion in revenue is pretty good fair size. They have been profitable, and their free cash flows, they have grown over time. If you go back to 2017, 3.7 billion, and then in 2023, 5.5, in the trailing 12 months, they're at 6.6 billion dollars. That's very good growth. Now, it is somewhat of an expensive stock. These stocks that are very consistent and well known tend to be expensive. It would be hard for me to get to this market cap just on free cash flows. Now, SAP, I don't consider to be a leader any longer. I think they're a good quality company. But when it comes to like customer experience applications, CRM, I think Salesforce has the leadership there. And when it comes to the core ERP market, SAP once was the leader, undeniably. But when the industry went from on premises applications to SaaS, cloud based applications, I think there was a resorting of the leadership, and SAP no longer is the leader in that space. I think they've lagged in redeveloping and redefining their company based on SaaS. And I think they're now falling behind other companies that are leading the charge. So that is SAP. I look forward to seeing their earnings later today. And we'll see what they have to say. One stock that came up over the weekend that I'll talk about again because I just was really impressed with was Maple Bear. And Maple Bear was a company that, on its name, I just didn't recognize it. I'm like, Maple Bear, I have no idea what Maple Bear is, but it's Instacart, which I'm like, oh, I've used Instacart. My wife uses it quite regularly. So we got into this stock, and I was really impressed. The really good fundamentals. It's a small cap, and coming out of, or I should say, it's hard to find discounted companies in the large caps. They've done so well for the last 2 years that you look at them, like I just looked at SAP, and it doesn't look like it's a discounted stock. But when you look at small caps, and when I looked at Maple Bear, I feel like Maple Bear's discounted. And I feel like Instacart is a leader within their little micro industry, which is grocery delivery of that type of product, perishable product. And their brand is recognizable. There's a lot of good things about, Maple Bear, and that's a small cap. So looking for value, I'm looking at small caps. I'm looking abroad. I've talked about the China trade because when you look at the fundamentals behind China, holy smokes, it's a very discounted environment over in China compared to the large caps in the US. The large caps are still excellent quality companies. I plan to hold my companies, but as I grow my portfolio, I'm probably going to be growing in small caps as well as the China trade. And I'll continue to add to some positions. Like I continue to add to Meta, to Google Alphabet, to Uber, and those companies, I just think they're part of the future, and I'll continue to buy into them. But I'm probably going to be buying some shares of this company here this week. I better not wait too long because the stock is rallying, and I'd like to start a position in Maple Bear. I think it's a quality company. And if you look at the chart on Maple Bear, it's not too bad. It hasn't been going crazy. The company did go public recently. Like if you go to the 1 year, it takes you back to, I guess, their IPO date, which was October 23rd. We're like rounding the no, it was September 22nd. So they've been public for a little over a year. And for an IPO, and there haven't been a lot of IPOs over the last couple of years. I think the IPO market has really dried up. And these guys here, from their IPO price to where they're at now, that's not too bad. I usually see a company IPOs. It IPOs at a very high price, and then it gives up a lot of that price in the next year or two. It hasn't been the case with this one. So um, I'm gonna take a look at this stock. Maybe buy it today. Maybe buy it this week. So Instacart. So let me say good morning, everybody. Bad Omen, good to see you. It is going well. Tomas, buenos dias. Hope you're doing well. Android PC, good morning. Trader Pratt, good morning. Omar, good morning. Thanks for tuning in. Bad Omen. Doesn't SAP also run the San Diego Sharks? Or am I? So I think, the naming rights for the arena where the San Diego Sharks play, I believe has SAP on it. If you look at the stadium with where the Niners play, I think there's also some SAP branding there. And I think because SAP for North America is headquartered in Palo Alto, not too far from where the Sharks play. So I think that's behind it. And but I don't think they have any ownership for the Sharks. I think they just want their name to be on the arena so they can get it some exposure. And Kiter, good morning. Hopefully you are doing well. All right, so let's take a look at the market again and see what's going on. So we're still pretty much flat. Not a lot going on. I guess it's a little bit of a calm Monday morning. Things are pretty flat. The Russell is giving up a little bit, and the VIX is up a tiny bit. So the volatility is a little higher. Not too bad. See if maybe let's take a look at China stocks. How are they trading this morning? They are down. China stocks are down. So the whole market in Shanghai was up just a tiny bit, but it looks like China stocks have sold off today. Just looking at this, I'll probably add some shares to JD, NetEase, and I own Baidu. So I'll probably add a few shares. I'll see where they're trading, maybe in about an hour's time. I don't like trading in the first hour of trading. Just a lot of things are moving up and down. We'll see where they're trading a little bit. So Trader Pratt, I don't expect much from the market going into Tesla earnings this week. Yeah, I think you're right that there's some big names coming later this week, and those may be the events that the investing community is looking to occur before they know, hey, is this market going to continue to rally up, or is it going to give up some of these gains? I wouldn't be as surprised, and I think Prad's commenting on the election. I've been surprised for the last month and a half that we've seen the market go up like it has. Now I'm surprised, and I'll take the gains. If the market wants to improve the value of my portfolio and surprise me, I'm okay with that. I just expected that we would have more sell-offs and lower stock prices to this point. We are sitting roughly 2 weeks from a huge election, and it's a pretty contentious election. I'm not going to get political on you. I'm just going to say these elections tend to just put a lot of tension, fear, anxiety. If so-and-so wins, how is this going to affect the overall economy and everything, right? And I think that to this point, I am surprised that the market just keeps going. The market's almost like has blinders on and is like, okay, we're not going to pay attention to the election, and it just keeps chugging along. Will it do it for the next 2 weeks? Maybe if the market keeps those blinders on and no other bad news hits the market, we'll get through the election, we'll get to the other side, and we'll know who's going to be president. We'll see if there's a shakeup with the Senate. We'll see if there's a shakeup with the House. And then we'll get our heads around, what's the government going to look like for the next 4 years? And we'll move forward. So we will see how the market sorts itself out after the election. But to this point, I've been surprised that the market hasn't been a little more spooked in the month of Halloween because of this election. But maybe this week, who knows? To this point, I'm gonna stop guessing because my guesses have been wrong. I'm consistently wrong. So we'll see what happens. So Peter, you look at you like Enphase. Let me think about that one. Mike, the dividend investor guy. Good morning. SBLK. Starbulk Carriers. So we'll take a look at that. So this is a shipping company, engages in the ocean transportation of dry bulk cargo. Okay. I understand what they do. I owned Panel before, and I'll kind of put that up as a comparison. I owned this little company for a while, and it really paid off. I'm sorry, Pangea Logistics. And I think of it as Panel because of the symbol, but we'll compare it to that a little later. So Starbulk Carriers. So they ship a material, a commodity, iron ore, minerals, grains, fertilizers, bauxite, steel products. Now, we've heard the economy in China is going to be good, and the government in China really wants it to be good. So they're going to be really stimulating their economy to try to get it going. So there's probably going to be a lot of shipping of commodities like this to China so that they can manufacture, their products. Like they're going big in EV. They manufacture a lot of technology products. They manufacture a lot of stuff in China, as well as in the U.S. The U.S. has to get some materials and some key commodities into its manufacturing and into its supply chain, as well as other parts of the world. I know that the United States is nearshoring in Mexico, so Mexico has to get materials and so forth. So this is a necessity from kind of a macro level, kind of big picture, situation. I think the economic environment should be pretty good for a company like this. It shouldn't be like, oh man, we're going into a nasty recession. These guys are probably going to really hit the wall. If we look at the 5-year chart, the stock is up 80%, which is good. It's small. So I just say good because if it's a small cap, over the last 5 years, maybe it could have done better. Pangea over the last 5 years, up 100%. And see the chart here. I like seeing charts that kind of go up and to the right with some volatility, but up and to the right. This one saw a really nice rise coming out of COVID. Man, it really shot up to $32 a share. It's calmed down. And over the last year, it's really, you're breaking even. The company's seen really good rally in their stock. Their stock got up to $27 a share, and it's down to $20 a share. Interesting. So the market cap's $2.39 billion. Revenue is $1.1 billion. PEs are really low, 7.5 for the current PE, and forward P is 5.6. Huge dividend. Wow. So this is a nice dividend paying company that isn't just based on the charts. The stock hasn't really flown up, and part of that dividend high rate is probably because the stock price has come down so much. Let's look at their dividend history, and their payout ratio is about 100%. We'll take a look at cash flows and see if maybe we think that no, actually dividend payout's better than that. But this is what stock analysis is calculating. So they're paying out 100% of their dividend, 14%. Okay, so take a look at that. Over time, they pay out a dividend. You can see that they've paid out really high dividends when maybe the shipping rates were much higher. They were making so much money they could basically increase their dividend temporarily. And then when times got tougher, they really scaled it back. More recently, they're paying about here, they paid 70 cents a share for that particular quarter. That's a very good dividend rate. Okay, so the dividend is where the value's at for this stock. You know, the stock up 80% and paying a dividend, that's a pretty good return, right? Because you have 81%, and let's just say over the last 5 years they paid an average of 10% dividend. That's a very, very good return. Because if you had that 10% dividend, you're looking at 130 percent, return. You more than doubled the value in your investment. So that looks good. So let's see if the balance sheet looks good and if the statement of cash flows look good. So cash on the balance sheet, 466 million. Okay. And their debt may be a little high because total long-term debt's 1.169. That's not too bad. So they have about 700 million in debt, net debt after you deduct the cash. When I look at their EBITDA, yeah, so they could pay off all their debt in less than 2 years because they have like 700 or so million dollars of net debt after cash. So the balance sheet's in good shape. Balance sheet is in fair shape. Now let's look at their cash flow, and I want to kind of get a sense of at 70 cents per share per quarter, so that's $2.80 of dividend per year. Can they afford that if we look at the statement of cash flows? So cash flow trailing 12 months. So cash from operations 412, CapEx 44. So they have free cash flow 367 million. So 367 million. Free cash flow per share, $3.78. Okay. And they're paying out $2.80. So assuming they do not need to buy new vessels, they do not need to spend a lot on their fleet, they could afford the dividend. And if they see their shipping rates rise, that cash flow is going to improve. We look at the history of cash flow. Here's the cash flow line. You can see in 2021, their cash flow just flew up. Shipping rates were higher. And it's settled down, but now it's doing quite well. So not sure how stock analysis calculated the payout ratio. It probably calculates it based on net income and so forth. I like to look at cash, and based on cash, they could afford it. They're paying out, rough estimate, they're paying out 75% of their free cash per share. And I think that is sustainable so long as shipping rates stay where they're at or go up. If they go up, they're probably going to raise their dividend rate. So this is an interesting idea. High dividend rate with a company that is in an industry that should do okay. And if, for all I know, 6 months from now, they're doing good. And if they're doing good, shipping rates have risen. This stock's really going to move up in value. The stock price is going to go up. Meanwhile, you're being paid really nice dividend. That dividend looks great. Right now, I'm not in a shipping company, but maybe I should. And I've done well with shipping companies. The one that resembles this company is this one. And this company I owned for a couple of years. I bought it around this time. I held it for a couple of years, and it's a small company, 302 million. And when I started buying into it, it was like half of that. And I just really understood the business, understood that hey, if these guys they have a specialty of what they do. They like when you're building um, some type of project in remote areas. These guys are the shipping company you want. If you need to break ice in the winter, this is the shipping company you want. And I thought, okay, that uniqueness looks good. And I invested, and it was a really, really good investment. It went up in value and it paid a nice dividend along the way. It was like a winner two ways because you look at this return, right? 98% if you bought way back, even before it's low. If you look at its low, you'd even be doing better. So your investment rises in value by 100%. And if you get paid 6% over 5 years, that's another 35%. So this puppy did 135% total return for you. That's great. That's awesome. So, um, I can only see green flags on this one. I think there's green flags here. The economy for 2025, I'm not seeing any like big major problems. I'm actually seeing opportunities. I think China wanting their economy to grow is going to help companies like this who are like, hey, we need more iron ore in the China manufacturing complex. So we need Star bulk carriers to ship more product to our Chinese ports from wherever it's being mined. All that, and a lot of it is being mined in Australia. So pretty good idea, Mike. I like the idea. And I'll make myself a note, study shipping companies. I've made money on shipping companies, and I think I can do it again. Okay, so went over that one. It looks like you have a comment. Yeah, I mean, if you play it defensively with Star Bulk, right? And again, their stock price is not like shot up. It's not like a semiconductor stock that's up like 500% in the last 2 years. Now, you're buying at what seems to be high level, reasonable price. And what's the worst that happens is it stays around $20 a share and you collect 14%. That's not bad. That's not bad at all. What if it rises to 30% and you get 14% dividend? I like that scenario a lot better. And I think that's realistic. If the economy does well, which I don't see why it can't start gaining some momentum in the US. In China, they're almost kind of kickstarting it like, hey, we're going to make this economy do well. We're going to make it grow by 5% GDP growth. Yeah, I think it bodes well for shipping companies of this type. All right. So, and I did make money on Zim. I made money on Zim and Pan L. Um, and maybe it's time to get back in. Maybe look at Zim, Pan L, SBLK, and see which horse I might want to ride again and go from there. So these are small caps. And I think small caps have been, first they've done okay. It's not like small caps have been terrible. The Russell represents small caps, better than for sure the NASDAQ or the S&P. But as we look at the S&P versus the Russell, for the last year, the Russell is keeping up with the S&P. So the last year looks good. But the S&P has just been on a tear. The S&P is represented in the gold or yellow line here. And it's just been up and to the right. And it's really separated itself from the Russell. The Russell is only achieved about half the performance in the 5-year compared to the S&P. So that separation to me really shows up in the fundamentals. When you look at fundamentals, you're seeing better PEs, you're seeing better cash flow, compared or in proportion to its stock price. The massive caps have done great, and they seem to have this gravity to pull in investors that are very comfortable with Apple and Nvidia and Microsoft and so forth. And I can understand why. Those are very recognizable names. They're a winning trade that people want to be a part of. And when you get to these smaller caps, I mean, Star Bulk, who's heard of that company, right? So I think fewer investors are that much ready or ready to invest in small caps they've never heard of. And I think it presents an opportunity for the investor that's like, hey, I'm going to be fundamentals driven. And I know this company is going to do well fundamentally. And I think over time, it'll continue to reward investors. So good luck with that. I think it's a good area to be looking at. All right. So I might keep it short and sweet this morning because I thought there was going to be earnings this morning, but there isn't. So let me just take a look at a few of the metrics I like to look at. It looks like communication services is doing well, which means Google Alphabet's doing well. Meta is doing poorly. Netflix is giving up some of the great gains it had last week. Last week, it was just on a tear. T-Mobile's up a bit. Verizon's up a tiny bit. Disney, Comcast. So that's what's in this space. DoorDash. What's DoorDash doing in communication services? They should be more of a logistics, their delivery company. What's DoorDash doing in there? I think that's a misprint. So communication services, I wonder if that general screen is accurate because I'm not seeing a lot of green, not to represent the number one sector. Let's take a look at China. China's still mostly red. Baba's down. JD's down. Li Auto's up. 10 cents up a little bit. But in general, China is down today. Semiconductor stocks, how are they doing today? NVIDIA continues just to rip up 2.62%. TSM is up 0.86%. Broadcom up. AMD up. So Qualcomm is down. Texas Instruments is down. So semiconductor just continues to rip up, and its PEs are pretty high, 66. Well, TSM isn't too bad. That looks pretty reasonable. Broadcom, 165. AMD, 187. Qualcomm looks pretty reasonable. But Intel, well, that's a dumpster fire. And then ADI, Analog Devices. Okay. So that's what's happening. It's kind of a quiet morning here on a Monday. Not a lot of action to report. Not a lot of things to see. So Shadow Guy I couldn't get into. Yet Zim has been really volatile. It's been up, down. It's a highly fluctuating stock. CRT is so these guys are into so they collect their revenues with royalty interest in properties in Texas, Oklahoma, New Mexico. So they're energy company. So they're not necessarily extracting or doing the work, but they own the oil fields, and then another oil company like Exxon, makes an agreement with them, extracts the oil, and then gives them a royalty. The stock is down because oil prices have been not cooperating. 35% pays a high dividend rate. Okay. Over the 1 year, it's down 40%. Oil prices are down. And where are oil prices today? So oil is experiencing a little rally. It's up above $70 per barrel, but it's really been, bouncing from, low 60s, even got just slightly below $60 per barrel a month or two ago. It's popped up to like 75, and it's kind of been, bumping along that range. I don't see a big giant catalyst that's going to move it to like $90 per barrel. If we did see something like that, you would see oil companies as well as the stock we were looking at really just rip up. It's an interesting stock if you want to collect a nice dividend and kind of play the hedge play of, if oil prices really rise, this company is going to work. The stock price is going to jump up. If oil prices stay where they're at, you collect a nice dividend. The stock has sold off, so it's not like you're going to see a further decline in stock price. I don't think so. And yeah, I think they don't stand a lot of risk, like because they don't do a lot of the extractions. So they're not buying like a lot of capex or anything. So it's an interesting idea. Interesting idea. Timing might be good too. While oil prices are relatively low, you get into an investment like this. Yeah, the chart is a little ugly, but ugly is relative to who's looking at it. I think it's an opportunity, right? If you look at quality and you look at, man, these guys are tiny, 68 million, and they have very low revenue, but they just own these. They have the rights to these sites, right? These lands where oil is being extracted. So it's an interesting play. Yeah. I'm not going to buy more into energy. I'm actually trimming down my position in Chevron. Chevron's a really known name. Good thing to say about Chevron. I just think I have too much of Chevron. I recently sold about $15,000 of Chevron. I still own about $100,000 of it. It'd be nice to get down to about $80,000 in Chevron. I think having an oil company, especially over the last 2 years, has been Chevron's underperformed just about every other sector in my portfolio. So I'm kind of selling off. So I'm not in a mood to buy any more energy for the next couple of years. Shipping, on the other hand, that we talked about earlier, I'm not in any shipping companies. And I could totally see buying into a shipping company, putting that in my portfolio. That's more of an industrial stock since it does ocean freight. So it looks like, Mike, you are still in for oil related stocks. Sounds good. I mean, if oil rips up, you're going to be happy. All right. So I think we're going to call it a stream. Looks like the market is really calm. No real big fireworks. We'll see earnings after the market closes today. And then we'll see a lot of earnings this week. The big earnings, let me look at the earnings calendar. So today, after the close, a lot of earnings. Tomorrow, General Electric, Philip Morris, some aerospace and defense companies. 3M is going to announce. So that'll be interesting. Tesla on Wednesday. And Tesla, of course, that's like a really popular stock. So it's going to get a lot of attention. Warren Buffett's investment in Coca-Cola. That'll be covered on the 23rd. Some other names. These are pretty substantial names. ServiceNow would be interesting to look at. I think they are overpriced. I think they're really playing into the AI story, which I don't blame them. They're trying to catch up and surpass Salesforce. Salesforce is substantially bigger than they are. And ServiceNow is somewhat of a one trick pony. They do more of the service offering within the customer experience realm, within the CRM realm. They are smaller. They do what they do very well. But I think their market cap is a little too high for that type of business, that type of revenue. And I think the story is much bigger than the fundamentals behind the company. But we'll see. We'll see what the market says after they announce, and we'll see how that stock does over the next year or so. And then on Friday, we have some earnings before the bell. I'm going to look at Union Pacific. I've been trying to get into Union Pacific for years. Never found a good entry point, but we'll see if it happens this time around. And Union Pacific will tell us a lot about the economy. Honeywell, a nice industrial company, that'll tell us a lot about the economy. UPS will tell us a lot about the economy because as companies ship, the volumes of shipping tell us how much economic activity is out there. Okay, so next week is gonna get, I think it's gonna, we're gonna get bigger announcements next week. On Monday, we have some notable names. On Tuesday, it gets, hold on a second. So Tuesday, we have Google, McDonald's, AMD, Visa. That's big. Monday, we've got Waste Management. And then on Wednesday, we have Microsoft, Meta. So next week's going to be humongous. This week's going to be pretty active. Tesla being probably the biggest name that's going to announce. Next week, it's going to be huge, and we'll see where things land. I mean, there's huge names coming out next week. Eli Lilly, that's just been ripping up, is going to announce next week. So it's going to be a couple of weeks of a lot of information flowing, and we'll see how these stocks reset, how their stories reset on what they're trying to do over the next couple of years, and see how their stocks are going to continue to work or maybe not work and they sell off. Like Netflix really had a great earnings and their stock ripped up. They have a good story. Their business is working. Good for them. TSM is the same thing. They are doing a very good job. They're growing their business. And if they can keep it going, man, it's hard to imagine that TSM is as valuable as they are because they are a hyperscaler, a foundry for an industry. So they actually just do the foundry services. They don't own any of the IP. So it's not like they have that desirable position like an NVIDIA where it's my IP, nobody can copy it, and I get to make a huge margin on it. TSM has to produce for others, and their margins are not as good as NVIDIA. But the market thinks that they are that valuable, and the market's going to price them where they're pricing them. All right, guys. So everybody have a terrific Monday and have a very nice week. In the morning time, I'll see you on Friday, and enjoy the week. Hopefully you make a lot of money. And then in the evening time, I will hopefully see you tomorrow, unless something changes for me tomorrow evening. And then I'll probably stream on Friday evening since I've got some radio silence planned this week. In the meantime, if you want to communicate, I'll probably be on Discord as often as I can get on Discord. So if you want to communicate, jump on Discord. And I'll be releasing some videos this week. But from a live stream perspective, it is bye for now, and I'll see you on Friday morning, or I'll see you tomorrow night. Everybody, take care.